Hello, YouTube. Is it finally time to buy stocks? September's been brutal, and it's the worst month for the S&P on average over the last 3 decades. But yesterday we talked about that. After we had 1, 2, 3, 4 in a row, we've already gotten our 4 in a row. We went through and talked about what can happen in the month of October, and we might be pleasantly surprised. We escaped extreme fear. We're only here at fear now at 29, and Jerome Powell is talking alive right now. So we can note here that Jerome Powell, the big man, has been giving commentary for hosting a town hall with educators. We're not expecting monetary policy, but everything he says is going to matter. So we're focusing on that. But we have one of his Fed members, Fed's Goolsbee, and this is from early this morning. I'm still trying to process why long end interest rates are increasing. What does that mean? They're trying to walk this down. And this really matters because we've looked at this graph before. And we know that the 10-year Treasury note is supposed to be inversely correlated to the NASDAQ, which means if the black line goes up, the red line should go down. Black line goes up, red line should go down. Well, we've been noticing that they're very synchronized lately. And when we read this comment, look at the time here. It's just before the open. So if we go here to what happened to the S&P 500, what I'm going to do is actually pop over here to the futures. And we want to see exactly what happened on the chart because you might be surprised. We went straight up after that headline comment came out. That's correct. And what happened to notes? To yields? They went straight down. You can see what happened right on the 9 o'clock hour right there. Time to damp it, baby. Let's go down. Let's make it go down. Looking here at the 10-year note, down. So finally, some sweet, sweet relief. Is it enough? I don't know. We still have to see another massive decline for this to really play out, but it is, it's cautiously optimistic, and it's looking good. We also have a headline here that came out this morning from him. The unwinding of supply shocks, the composition of demand returning to more stable patterns, and Fed credibility are central to why I think it might be possible today to reduce inflation while avoiding a deep recession. What does that mean? It means tomorrow's number is super critical. We've talked about this over and over for a long time now. If this number comes in as expected, that is going to feed through to exactly what he's talking about. We can also note that the market listens to Mr. Goolsbee. Why? Look at what the chart did today, right? Look exactly what it did. And this is important because we actually were getting a big knee jerk on these initial jobless claims coming out and the GDP. I'm not sure what Jerome Powell's talking about. I'm recording as he's talking right now. But as we look forward to tomorrow, we got CPI out of Europe, expected hit 4. And then we got PCE coming down to 3s. I think this is going to be bullish. It's what I mentioned in the video yesterday. And I was quite surprised that it was really hard to find a consensus between whether we're bullish or bearish because they're like, Justin, look at the 1 week chart. It's bearish. But I'm like, well, let's look at year to date. So I think it really depends on your time horizon. So thank you to everyone who commented yesterday. And I'm going to ask you for a huge favor before we go further. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really, really appreciate that. Thank you ahead of time, and I really appreciate your support. So let's go forward and see what else we have to talk about today. So we're going to go look at charts 100% a little bit later. But where I want to go first is really understanding this relationship between the 10-year note and the NASDAQ. So where I want to actually start is by popping over here to a one-day chart because we want to look at short-term price action on the S&P before we look at the NASDAQ. So I'm going to take a horizontal line. I'm going to grab the magnet, and I'm going to just snap it on yesterday's high of the day. Why? Because I want you to note the push-pull off the green line. So look what happened today. So we open the day up. Let's actually blow this up for people who have a hard time to see on their mobile phones. What happened today? Mr. Goolsbee, nice to see you. Boop, all the way up. Back test, form some kind of inverse head and shoulders. But first of all, we tag this area. That's really important. So we put in a marginal lower high by about 15, 20 cents. We hit it, back off, build up pressure, nice dip buying. Then we hit it, we claim it, we back tested once, back tested twice, and back test and hold it on a third time. What does that mean? That is us shooting over yesterday's high of the day, back testing and finding support on what used to be resistance, resistance, resistance. So that's a notable trend change on the chart. So that's really, really, really important. But it's not enough for the S&P. We have to go even higher. But what we did manage to do was to tag the 61% retracement, which I'm paying attention to, at 42961. We went as high as 430.23. What do I think this is? I think this is price discovery, where they're discovering where the sellers are and the resistance is before they try to punch it up tomorrow. Now let's go over here to QQQ. And then we're going to look at higher time frame charts. So stay tuned. We're going to show you everything we need to know into the close of the week and the month and the quarter. All right, let's hide everything. Let's do that exact same thing here. Magnet, yesterday's high of the day. Let's look at a 15-minute chart. Ah, it did it too. That's right. So yesterday into the close, we hit it. And then today, sorry, what time is that? That's Wednesday. That's Thursday. My bad. So that's yesterday. There's our high of the day from yesterday. So at the open, what do we do? Man, we rock it right up to it. So let's just look here. We rock it right up to it. We claim it. Back test, hold, back test, hold, back test, hold. Why is that bullish? Well, it's just one candle. We know we need to see at least a couple of candles to form a trend change. So we got a low, higher low, high, higher high. We need to see that at least tomorrow. Another higher low, another higher high. Why? Because with 3 candles, we can start a trend. With 2, it's not a trend yet. So that's what we look for when we were reversing to the downside, but also what we're looking for to go back up to the upside here. And you can note I have a key area identified here, 35816, because this goes back here to our gap zone, which we're now just going back and retesting and filling. So why does that matter? Well, before the weekly chart flips bullish and before the monthly chart breaks bullish, we're going to have to see some progress on the daily chart. So what I'm trying to show you is that we haven't reversed yet. Like, don't get it twisted. We're not going up, right? This is our uptrend here. We're not going up because we cracked it. We're arguably going sideways between the Fibonacci's here. The 50%, sorry, that's the 61. So between the 61 and the 78, or the 2 blue lines, I would say we're going sideways. So we went down for an extended period, then we went up for an extended period, then we stopped going up. So what can we do? Well, we can do more of the same. We can go sideways. We can continue the pattern by just doing this, or we can break down, or we can break up. That's it. Stocks can do 3 things, as you guys remind me, every single day. And I'm going to ask one more time to please consider subscribing to the channel if you're enjoying the content. Thanks so much ahead of time. So the daily chart is telling us that we're holding yesterday's high. They don't want to punch it up too much because we're not sure what the data is going to be, but it's looking constructive. If we now look here to the weekly chart, we got some green here, Mr. Green. Thanks for making an appearance. So we can note that we are up by 10 cents on the week, a whopping 0.03%. I like to see that. I like to see that because that is a failed breakdown. Part of what I've been talking about over and over is the failed breakdown pattern. We're seeing that here on the weekly. And since tomorrow is Friday, if we're going to be green on the day, this pattern is going to hold. I want to see that. I need to see it. Also, QQQ already has a monthly failed breakdown. We're now back above last month's low at 35471. I can go through and show you exactly what happened here too. So, because I called this out to our group. And again, if you want to see all the notes and you want to trade with me, because a lot happens after we sign off YouTube, you can go to thealgo.com to trade with me for 14 free days. But anyways, here you go. Here's what you missed this morning that I went through. So we're looking at the monthly low. We're going to grab the horizontal line. Let's grab a magnet. Let's snap it to yesterday's low. Why? Because I want you to note that we looked at the high of the day from yesterday, but look what happened on this green line here this morning. So what happens? Market opens up right here, 9:30. So we can see on this opening red candle right here, we had a high of 354.5. There's probably an iceberg there. That's why it hits 0.5 and backs off. But then on the next candle, they don't waste any time. Higher low, higher high. Then we get that same pattern we're looking for on the weekly and monthly. So low, higher low, higher low, high, higher high, higher high. What does that lead to? Leads to a reversal. You can see the chart goes up. But what that means is that after we gap down, pump up, claim this area, then we boost it up all the way to yesterday's high of the day. And you can see that right here. That's how we got through it. So it's really important because, trust me, it's no surprise that after we got through the monthly fail breakdown, which we just looked at right here, right here. Let's hide that. Once we get back above last month's low, 35471, hey, the rally started. And then it dragged S&P higher too. So that's what we want to see. We want to see bullish price action. So the daily chart showing some signs, and I can tell you, we got a couple of algos on key charts. If you want to know what those are, again, you know where to find us. So you can go to thealgo.com. Weekly chart, failed breakdown, green by a couple cents, right? Take it for what it is, a couple cents. On the month, we're quite red. We're down by 5%, but we got a failed breakdown. That's perfect. Why? Because it's a trap if we can go higher. If we don't go higher, all bets are off, right? It's going to just be a breakdown. It's not a failed breakdown. So if now we go through that exact same thing here for for the S&P, what is different and what is the same? Well, first of all, we got a mathematical number here, 429.61. So let's just go back to QQQ to understand what we're looking at here. So we're looking at a Fibonacci retracement area, and QQQ pushed off first. QQQ claimed yesterday's high first. QQQ went green in the week first. QQQ claimed last month's low first. So what does that mean? This chart is leading us. Chips lead tech, tech lead SPY. That's perfect. Why? Because we're seeing what we want if we're going to get a reversal. So if we understand that QQQ bounced off the mathematical number, it did not make it anywhere near the 200 DMA. That's all the way down here at 330, or our 50% retracement, the 50-yard line between the all-time high and our October low. That's the midpoint, the half yard line. So the fact that we found support on the mathematical number and not on the 200 DMA is very significant. Why? Because the S&P actually has those areas converging here. You can note we're pretty close to the black line at 418. We hit a low of the week at 422, roughly 1% off. But we also have our Fibonacci area here, which we're currently below. So QQQ came down and bounced off this area. S&P did not. It came down lower, and now we're trying to actually reclaim it. It's roughly 430, 429, 429.61, I believe. Yeah, 429.61. So the daily chart is showing some potential. We're still trending lower, but if we get back above 430, we're going to be back above our primary uptrend and we can start rallying. That could be the key catalyst, technically. Now, if we look here at the weekly chart, we did make progress. Technically, at one point during the day, we did have a failed breakdown, but as of right now, we're red on the week by about 1.9 points, and we are below last week's low at 429.99, which means we need 430 minimum into the close tomorrow at 4 o'clock to fix this chart. We can also note that our weekly uptrend gets a perfect bounce, and that's because it's one candle. On the daily chart, we get 5. Now let's zoom out to the higher time frame chart because, again, this is going to close out tomorrow. So as of right now, we got to break down on the weekly chart. That is not good. We got to break down on the monthly chart. QQQ is already led before we get the confirmation that I think is going to come from PCE, but the S&P needs to rally more. So we need to get to 430 to fix the weekly chart here, to reclaim the Fibonacci area and to reclaim our uptrend on the daily chart minimum. And then the next area is going to be 433.01, which means we have to basically put in a 1% day tomorrow. Why? If we go to, let me just pull up the calculator here. So you can do it on the chart. I like to do it on here. 428.52 times 1.01. So 432.8 would be exactly a 1% rally. So we need just over a 1% rally to reclaim 433. If I'm right about PCE being the catalyst, there should be no problem getting a 1% move. That's what I believe. That's what I'm trading based on. So what I need to see has been very clear now. I've been talking about the same thing going all the way back to July, where we closed the month out, we put in the lower high, then we got the breakdown. So if QQQ is leading, we need to see the S&P follow. And I'll give you a little bit more evidence here, which looks pretty good. Why? Because even before we had that headline from Goolsby, Bitcoin went and claimed its 50 DMA. So look and see what happened here. And I appreciate it if you're still watching because I know this might be a little bit repetitive. I've been going over the same thing for a while, but just look and see what happened here. So price discovery to the 50 DMA. What happens? Well, we lose most of the gains on the day, right? Rallies up, sells off. What happens today? Opens up and reclaims the area. Price discovery yesterday, claimed the area today. I think Bitcoin is one day ahead of the broader market. It's up 3% today. It's back above its 50 DMA, back over yesterday's high. Here we got double checking low, higher, low, higher, low, higher, low. So we got 3 higher lows and we got high, lower high, higher high, higher high. So we have 2 higher highs and 3 higher lows. What does that mean? They've played defense 3 times and they're also playing offense twice. That's good. This is only the daily chart though. If we look to other asset classes, let's look over here to Ether. Why? Bitcoin first, but Ether next. Exact same thing here. Price discovery, low, higher, low, higher, low. Volumes coming in. We're back above yesterday's high. We just tagged the 50 DMA. We're starting to get things claim that 50 DMA, which we went over extensively yesterday. Man, it's looking constructive. I'm not sure it looks bullish. Yeah, we need to see more things go higher because we have death crosses. And frankly, there's a lot of uphill lifting we're going to have to go through. So that's really what I wanted to focus on. If we look here now to the indicators we looked at yesterday too, the above or below the 50 DMA. Let's look at the weekly chart. Whoa, this looks like it's a bottoming pattern. It usually is. Look here to March. Look here to where we are right now. That's where the market bottomed this year, by the way. It's in March. So March 20th, let's see what happened. Oh my goodness, March 20th, that's like at 388. Then we went where? 460. Whoa, 80 points, 20%. Really? Yes. So this was the oversold condition, and then we became less oversold. If that same thing plays out here, it should rally right back up. Should, not will. That's what we're not sure about. We look here to our 200 DMA stocks above or below. Here we're at 39, which means 4 out of 10 stocks are below. Low, higher, low, higher, low. That's really important. Why? Because it's telling us that we found support at a higher area, but we are depressed. We're down. This hurts, right? A lot of stocks are down, more than half. The 50 DMA is way worse because 9 out of stocks are below their short-term price, and we've been going over it. It's no surprise. A lot of charts are broken. So not only do we want to think about these different indicators, we want to look at some risk appetite, which is going to be things like crypto. We know how to look at that. It's also digesting its 50 weekly moving average for Ether. It's digesting, and its 200 weekly moving average, 1668, trying to get through both. But what's so important for me going into tomorrow is that if I am right, the feedback that not that I want to see, but that I need to see, I want to see this candle close red tomorrow. I can't tell you how important this is. I want to see a power slam. It's up by, sorry, let me double check and make sure I'm on the right board here. So here's our weekly chart. Let's go back to this one. We're currently up by 3% on the week. For us to get back down to the area that I have a little bit less anxiety, we need about a 6% dump. We have to dump down by 0.26, basically 0.3, or the expectation for the PCE to decline tomorrow, 0.3. We're going to go from 4.2 down to 3.9, or a reduction of 0.3. That makes perfect sense for me. I would love to see this chart close back below 433, but minimum back above last week's high at 4.509. So if we're below 4.5, my butthole is still tight, but it's a little bit less tight. It's becoming a little bit more loose. So pay attention to that for tomorrow. Finally, the other things we want to pay attention to, because we are closing out the week, the month, the quarter. Here we want to look at a chart for the DXY, and we have to go back in time for quite some time. Why? Look where the area comes from. It goes all the way back to 1989. I was less than 1 year old at the time. If we look here, that's resistance. We got support on our previous top, and we found support in our previous area here. It's basically a cup and handle that passed. So if we understand the action, we understand that we're right near resistance. We tagged it, we backed off, but now we got to claim it if we're going to go higher to where? To like 120. So if we look here on DXY for a 1 month chart, because we're closing this one out tomorrow too, going back to the 1970s, which is when we had that big bout of volatility, you can note that inside the yellow box is where we start to make moves higher. Like we made a move higher here, made a move higher here. While we enter it, backed off, and now we're just not sure. So on the chart here for the dollar, we had a false break, which is a bear trap. We poked it again, but it's up by 2.4% of the month. So we're clearly still pointing up. And we got a decision here in the next few months, like going into basically the start of the year, but out to July. We're going to have to see whether or not the dollar breaks down and helps stocks, or if it keeps going higher and hurts stocks. So without going too much further, there is a lot on the line tomorrow. I encourage you to watch the weekend video now queued up here on the left-hand side. If not, come hang out with us tomorrow for the final hour, where we can see exactly what's going to happen into the weekly close. Thank you so much for tuning in, and I look forward to seeing you tomorrow. Thank you.